Thanks for inviting me over. The way I'm going to start is I have a short presentation. So maybe I'll go through that presentation for the first sort of 20-25 minutes. And the idea is obviously to open the floor to questions, and you guys can be, feel free to ask anything that you want to. I'll be happy to address as many questions as I can. So can I just project? Sorry?
Should I start with your, formally with your brief introduction, profile, and then we can.
So as part of the presentation, Pushkar, I was planning to go through my brief profile also. But if you want to do that, I mean, I'm fine. I'll just quickly maybe walk through my own profile while I speak, I guess.
Okay, so let me formally introduce Mudit to everyone. And first of all, welcome to everyone and all the participants, and especially Mudit Bali. And Mudit has experience over 14 years of experience across the startup ecosystem and investment management across Asia. Adibji, mute yourself. Mudit has experience over 14 years across the startup ecosystem and investment management across Asia. He was most recently a co-founder of Athene Capital Advisors LLP, which was an invest tech startup leveraging technology to simplifying investments. Prior to this, he was the senior vice president at Samena Capital, which is a leading investment management firm, which has raised a cumulative $1 billion of capital since its inception and has returned over $950 million of its investors across 51 partial and full exits. At Samena, Mudit was involved in multiple investments across India, China, Indonesia, and Middle East across a broad range of sectors, including but not limited to financial services, retail technology, and consumer experiences across technology and consumer experience across deal life cycle from origination, execution, portfolio management to exit, extensive experience of driving shareholder value creation by executing on value creation plans, working closely with CXOs and board members. Prior to joining Samena Capital, he was part of the IIFL, a leading Indian brokerage firm, equity share research team covering telecommunication and education companies listed on Indian bourses. Previously, while working at a leading Indian investment bank, he advised various small and medium enterprises on M&A and fundraising. So this is brief portfolio and brief profile. I think detail, if we'll go in detail, whole session will go in the detailed profile. So Mudit, now stage is yours.
Thank you. So I'll just quickly maybe project a short presentation. Let me know if you guys can all see it.
Yes.
Okay, great. So when I was thinking about this session, the big question that came to my mind on what exactly do I want to talk about today. And I thought I mainly want to talk about, India is going through some mega changes. I spent a large part of my career outside of India. So I'll walk through a little bit. Dr. Tripathi has been very helpful in laying out the profile, but I'll talk about specific experiences. But out of my career of about 14 years, I've spent close to 11 years outside of India. And it's sometimes lost when you are in India that how many things have changed and what are the big mega trends that are playing out in India. But I want to walk through some of those very powerful mega trends. And those were actually one of the main drivers that convinced me to come back to India and start up by myself, because these kind of changes only happen once in over 100 years. I mean there are not lots of these that are happening together. So I find them very powerful. So that's what I want to basically quickly run through today. Brief background, I think you guys have already probably gone through it, but I'm a 2006 EC pass out from IIT Lucknow. And then I straight away went for my MBA to IIM Bangalore, 2008 batch. And since then, I've basically mainly worked in finance. So 2008, when I graduated, um, between 2008 and 2020, I worked in firms which basically invest in other companies. They're called private equity firms. So essentially, like venture capital, these are companies, these are funds that invest in other technology companies and other businesses. And since I was living abroad, so I was not only investing in India, I was also at the same time investing in China. I was also investing in Indonesia, in Thailand, Singapore. We invested a little bit in Europe as well. So I've had investing experience that cuts across a number of different markets. And that is where, it's easy for me to then sort of compare on what are the things that are special that's happening in India. Some of the trends are actually common globally, but a lot of them are also specific India trends. And those are the ones that I want to talk about today. In 2020, I basically started my own firm, which basically uses artificial intelligence and machine learning algorithms to basically invest in the stock market. So we basically built an investment firm that leverages technology. And I'll talk about why I chose to sort of start up, etc., in some of the subsequent slides. So, I mean, why is it a good time to start up right now? So let me be very honest. In 2006, when I was in IIT, I would say none of my batchmates, or including myself, would have thought of starting up as a genuine career option. And I'm being very honest about it, because back in the day, there was no ecosystem. And today, if you actually go around India to different engineering college campuses, you go to different business schools, etc., the number one question that you get asked is, how can I start up? Like, what are the trends that will help me start up? So there's a big change in India in terms of how startups are viewed. And I mean, there's, I think, never been a better time to build anything in India. I mean, this is probably the best time I can think of. And it reminds me of what Jeff Bezos of Amazon says. Amazon basically, I mean, Jeff Bezos said that Amazon would not have been possible without decades of infrastructure that companies like FedEx, UPS, etc., had built, and the fact that somebody before him had already built the internet. So, in short, what that basically means is that to build a company like Amazon, what you don't see is that there's been hundreds of years of work that has already gone into the infrastructure. So, FedEx and UPS and some of these logistics companies have had existed for about 80 years before Amazon actually started. They'd already built logistics. They'd already built a lot of the infrastructure that allowed Amazon to build on top of it. And because they had built all these other infrastructure stuff, it made possible for Amazon to build and create a business that was as big as it is today, right? So let's talk about what are these kind of infrastructure stuff that's happened in India, which makes it very possible for new companies to get built here as well. Okay, so the first point is declining cost of technology infrastructure. So this is a very interesting point. So in 2000, or let's say in 2006, when I was graduating, if I had to actually start up a consumer tech business, I had to find a large amount of money to set up a data center, networking capabilities. I had to hire network engineers. I had to basically hire application engineers, etc., to build my infrastructure. Now that was a very costly affair. You needed at least $3 to $5 million before you even start, before you've done a single rupee of business, to actually just set up the infrastructure to launch your product. Now, today, things are very different. So I don't know if you guys have all heard about it, but there are these cloud services. What we're actually using right now on Google Meet is also a form of a cloud software. Essentially, what that means is companies like Amazon and Microsoft and Google have created these large data farms. And you don't have to actually go around putting your own infrastructure. You can actually use the infrastructure that is already provided by an AWS, a Google Cloud, and Azure, which is by Microsoft, dramatically lowering the cost at which you can start a business today, right? So think of think of any platform business that you can think of. So Zomato, Uber, Ola, Flipkart could have not been built in the 90s. They couldn't have been built in the early 2000s. And the reason is because even before you start, you would have had such big costs of building your data farms and your network architecture that, that would have itself killed their business plans before they start. So what AWS has done, as you can probably see from this chart, that the costs have dramatically fallen. And today, I'll give you an example. You know how much, when I started, how much did I pay for my infrastructure cost? For the 6 months, I paid zero. And then I started paying $20 or $30 a month. That is a huge decrease from a few $1 million that you have to put up before you actually even start a business, right? So this is the number one reason why I think it's very easy today to launch a startup. You don't need millions of dollars to start something. You can literally start with zero. And as you get more business, you can easily sort of scale up your infrastructure. So these are very scalable solutions as well. So one way to think about it is like, let's say today you have 100 customers and you only need, say, one megabyte of space. Tomorrow you have 10,000 customers, you need a gigabyte of space. And tomorrow you have 5 million customers, you need, a couple of terabytes of space. You can use the same AWS, Azure, Google Cloud infrastructure to literally scale up without putting in a penny of your own. They have already put the infrastructure in place. So I think that's a very powerful change that has happened. This is a global trend. So essentially, even global companies like an Uber and you might have heard of Lyft, which is the Ola equivalent in the US, etc. They've all been able to scale up very fast because of the cloud infrastructure that's come up. The second is also a very interesting change. So think of all the brands that you grew up with, right? If you think of all the large companies, ITC, Unilever, Imami, Godrej, these companies have been around for 100 years. So Unilever in India is over 100 years old. And the reason why you know the name of these companies is for many decades, they've been advertising on TV. You remember their ads. You probably remember the Hamara Bajaj and all these kind of names, which have been playing on TV for year after year after year. And what that does is it helps in building their brand. So now everybody basically knows what these companies are. For a new company to come in and build a brand used to be very expensive. So let's say if you want to spend money on TV or you want to advertise on TV, it's super expensive. Certain ad spots are like $10 million, $8 million. Not many companies, in fact, no startup can actually afford that cost of branding. The second change that has happened in branding is now the emergence of digital advertising. So if you know Facebook, Instagram, Google, you can actually start advertising to your target customer base for as low as 5,000 rupees a month. And that is a big change compared to what you would have spent, say, on television, even radio, etc., etc. So today, for a startup to actually get their brand name known has become a lot easier. Think of how many of you have heard about Zomato and Flipkart today. Zomato and Flipkart are less than 10-year-old in India, right? So essentially, they have been able to get the same amount of brand and mind space as 100-year-old companies. And that has been purely possible because they could use the digital sort of marketing route in their early days. Now, obviously, when you become very big, then you can afford to do television, etc. But for a startup to get their word across has become much easier. So that is the second big trend that's playing out. The third one is distribution. So you want to build your startup, you want to brand it, but then you have to actually sell it to the customer as well, right? So in the old times, not in the old times, but I would say still, there used to be traditional distribution, what we call as the Kirana store. Now think of what is the limitation of a Kirana store, right? There's only a small amount of space that the Kirana store has. You can see in that picture, the amount of products that he can put in the store are sort of limited. He can't put unlimited number of,
Mudit,
yeah.
Just can you again, after stopping presentation, again you can share? There is some people are not receiving that your
Okay.
presentation.
Okay, I'll do that 1 second. Let me know if you can see it now.
Yes, yes, yes.
Okay, great. So yeah, the third thing I was talking about is distribution. So ultimately, when you have to sell your product, for a startup was very difficult because the Kirana stores has only a limited amount of space that he can put products in. Now, if you are a Kirana store owner and I come and say, I'm from a new company, either you put my product on the shelf or do you want to put ITC, Unilever, Procter and Gamble, those kind of companies. The Kirana store has only limited space, so he would not be very willing to actually try out a new product because he already knows that Unilever and Procter and Gamble and Imami and all these companies, they already sell very well. So there is no incentive for the Kirana guy to actually try out a new product. But this is very different in the modern distribution world, right? So Amazon पे there can be any number of products. So like Amazon has no restriction कि कितना shelf space है. They don't care about they have to only put 500 products or 10 or 1,000 products or whatever. They can put millions of products on their platform, and they have no limitation of shelf space. So that allows startup companies to start selling. They get shelf space as well. So the other part of it is like there is no real estate cost. For example, if I had to sell and I had to set up a store, I had to set up warehouses, I had to set up logistics, I had to set up a whole host of things. All these things have, again, the cost of building that has become next to zero. So literally anybody who's sitting in a garage or sitting in a dorm in campus can actually build a product and sell it. He doesn't need a factory. He doesn't need, any big investment. He can literally start from anywhere. So the cost of doing business has really come down. So this is these are some of these global trends. Add to that, there is a fourth trend which is very specific to India, which is now to obviously connect to an Amazon, to connect to the cloud, to connect to all these, to Facebook, etc. You need internet, right? And India obviously has one of the lowest per capita incomes in the world and is very cost conscious. So unless you have a cost of internet that really makes it easy for people to use these services, these ideas will not take off. So this is what I would call the Jio effect. The telecom services in India are the cheapest in the world, and cheapest not by a little margin. If you, let's say, compare India to the US, we are about 100th of the cost of data. If you look at the cost of 1 GB mobile data, India in February 2020 was 9 cents versus $8 in the US and 60 cents even in China. So like we are 1/6 the cost of accessing internet, even compared to an emerging market like China. So what that means is once you get the cost of internet to being that low in the world, you will obviously drive adoption. So that is the fourth trend that's playing out. The fifth is, see, the beauty about all these things that they're all playing out together. That's where it creates a very powerful effect where all these trends are playing out at the same time. The fifth trend is the cost of smartphones. Now, I don't know how many of you remember, but when I was in college, anybody who had a Nokia 3310, I don't know if you guys even know what that phone is, used to be a big deal. It used to cost 10,000 rupees back in the day. It had absolutely, compared to today's phones, it had zero functionality. It was literally to make a phone call. And look at what has happened like in 21. For about the same price, so about $200, let's say, which is today about 15,000 rupees. So not very different from the Nokia 3310 price. Today, you can get a smartphone which has the computing power, which is infinitely more than what a Nokia 3310 had. And the cost is falling by the year, and the amount of computing power it has is going up every year. So the cost of internet is falling. The cost of using a device that uses these internet services, which is a smartphone, is falling. And this basically has led to an exponential growth on users. So if you look at the number of internet users in India, in the last 10 years, it has grown 10x. I mean, it's not a small number. We are now almost close to 1 billion internet users, which is almost the largest in the world. It's mind-boggling. So all these factors are basically playing out at the same time. And if you thought that only the 10x increase in 10 years in internet users is great, you know how much data have you been using? So we are actually increasing our data usage by 200 times. So between 2013 and 2020, in 7 years, there's a 200x increase in the amount of data that, you know, Indians have used. So I mean, the graph looks exponential, right? So all these trends are very powerful when they sort of play out together, allowing like an expansion of the market. So on top of that, there's another very interesting, this is a very India specific trend that played out. So India has built what I call the India stack, which is essentially like in the earlier years, you know, to grow an economy, you needed physical infrastructure. You needed roads, you needed ports, you needed highways, you needed a whole bunch of physical infrastructure. Today, to grow fast, you actually need digital infrastructure. So basically, the pipes that I was talking about that allow you to access internet is the digital infrastructure. On top of that, India has created some of the most unique projects. For example, there is this, I mean, obviously you guys all know about the Aadhaar project, the UID experience, which provides every user with a unique digital biometric identity, essentially mapping out all the billion users that we spoke about. So we spoke about the number of internet users in India. Not only are those users anonymous, but we can actually uniquely identify and digitize their identities, which has already been done through the Aadhaar setup. On top of Aadhaar, we actually built a bunch of very interesting paperless services as well. So the eKYC and the digital store of all your documents, etc. This created another layer of services. For example, today to open a bank account, I mean, 10 years back to open a bank account, it wasn't possible till you went to the branch and gave them a bunch of documents, signed it. I mean, go through 5 processes, and it took about a week to open it. Today, you can actually instantly open a bank account on the internet without going out of your house. And that is only possible because of the India stack. So when you talk about the Aadhaar, the eKYC, and all the digital documents, the documents that are all stored digitally, that is the change that is made possible. So think of it in a very different way, right? So about 10 years back, to service somebody in, say, very rural parts of India, for a bank, it was not possible because if they put up a branch, there are big costs, and they don't get the amount of business in that sort of village. So they never put up banking facilities in some of those places. But today, with these changes, you can essentially provide banking and finance and insurance services to every nook and corner in the country at a very low cost, because essentially you don't have to put up a branch, you don't have to put up people. All you need to put up are these processes and use the India stack to build it. So using obviously all of this, we also build the UPI, which is the Unified Payment Interface, which is one of the most unique payment infrastructures in India. I would say actually India is light years ahead of even the US and some other developed markets when it comes to payment infrastructure. I mean, we joke, I mean, I have friends in the US who joke that they are living in the 17th or whatever, 18th century for banking, where still bank-to-bank transfer takes 2 days, and you know sometimes charges are like $10 to $20 to make a transfer. And you look at India, you can literally pick up your mobile phone and in real time transfer money to anybody through a simple phone number or stuff like that. So it is just unbelievable what we've built on the payment side. And again, this was not possible without the other 2 layers, the layers of the Aadhaar and the eKYC and the digital locker, etc. You couldn't have built the layer of UPI. So essentially, you know, this stack that India has built allows it a very unique advantage. You know, we are now the number 1 digital payments in terms of volume and value country in the world. We are bigger than even China. We're definitely bigger than all the developed markets. And we are like 60% bigger than China. So China is a comparable population. They have very deep penetration of digital payments as well. But the UPI and the innovations that have happened on the India stack. Just look at this graph. So in 2005, digital payments was just 3% of the total payments in India. In 2020, it was about 40%, and in the next 2-3 years, it's expected to cross physical payments as well. So um, this is an exponential increase in digital payments. So what this allows is, again, for people who are looking to build new companies, it allows them newer opportunities, because the old pain points of collecting cash and dealing with your banking, etc., has massively got simplified because of the build out of this stack. And last but not the least, so what all these trends have also done is attracted a lot of venture capital in India. So I was part of an investment firm. Obviously, if you look across the world, there are literally very few countries that you can think of that get a bigger flow of capital into early stage companies than India. We are actually now bigger than China in terms of the amount of funds that we got last year from foreign capital. About 2016, we were $4.5 billion of VC investments. Only in the first half of last year, we did 3 times that. So that's the scale and size that we're talking about. Last year, India created about 50 unicorns. In 2012, we created 1. In 2013, we created 1. In 2014, we created 1. So essentially, from 1 to 50 in less than 7-8 years. So that is the explosion that you're seeing in the space. That's what makes me excited about building in India. That's what made me leave my job, move back to India, and try and build something in this ecosystem. So yeah, in summary, basically, as I said, the digital infrastructure and ecosystem in India has been at an inflection point for the past few years, and this will continue to play out. This is a long-term trend, and these 10 macro trends, really improve the odds of success for startups. So think hard on the business problem you're looking to solve, and the ecosystem will be supportive of the disruption. Things look much better today than they did when I was graduating. So it's an exciting time for you guys to all graduate. With this, I'll end. I'm happy to take any questions. If there's a specific slide you thought I went pretty quickly by, I'm happy to revisit. I'm happy to open the floor for questions.
Okay. So, means people present here through Google Meet, they can directly pose the question, and otherwise they can type their question on chat. And people watching us from YouTube, they can also pose their questions on chat box. Meanwhile, we have collected few questions previously, means from our team. So I will raise few questions there that has been asked. They are more like which is what is your personal story kind of thing.
Sure.
So
yeah.
One question is, what were the factors that helped you the most to keep going in this journey?
So yeah, that's a very good question. So obviously there are 2 big factors. One is the team that you're working with, right? So essentially the people that you decide, see, the startups is never a very straight line kind of way up. It's a very bumpy road. There are lots of times that you have doubts on, what you're building, will it work? Sometimes you think you build something very exciting, but you get 0 user traction out of it. So I would say what keeps you going in these tough times is basically the team that you have. If you're having fun along the way, it makes it much easier to even take some failures. So that was one part of what kept me going. Obviously, having a supportive family as well. That is the other part of it. So yeah, these are all psychological things. I would say you can't prepare for it. But let me give you a little bit of background in how it helped me. So in my earlier job, I was on the other side in the sense that I used to invest in these startups. I used to invest in founders. I used to invest money into companies and see them grow. So I sort of saw from a distance the kind of journey they go through, right? Because I had been investing for 10, 12 years. Um, and once you sort of seen a movie from a distance, and when you are the protagonist in this movie, you sort of know what to expect in a certain way. So that sort of helped me prepare a little bit. I always knew this is not going to be, I mean, it's never a simple straight right up. I mean, there are lots of these like ups and downs, and one minute you feel that, you're the king of the world. The second minute you feel like, oh, I'm wasting time trying to build this. So there's a lot of self-doubt. So it helps if you're very passionate about what you're doing. You have to be very clear. I like to say one thing, which is that, if you're building something for making money, for example, in moments of doubt, you will run away. But if you're actually building for the passion of, say, solving a problem, or, it's a tech thing that you're trying to build, it is something that really excites you. Even in the bad times, you'll be able to get going. So always, whenever you think of building or starting up something, do it from a place of passion, than sort of following the herd and seeing that, oh, so many people have become successful. Let me also try this out. That's what I would like to say to that.
Okay. So, related question, I think maybe partially you have answered it. How can we not lose hope even if things don't work?
It's tough, man. I mean, every person has their own way of handling failures, but there's a very interesting way to think about it. So, for the mathematically inclined folks, I think, which I personally love maths, etc. So I like to think everything in terms of numbers and all. So the payoff in a startup is very asymmetric. So like think about cricket, right? Let's say you are Sehwag, okay, and every ball that comes onto your stumps, you try and hit it for a six, right? So the payoff is, say, assume you are not Sehwag. Sehwag might hit it 50% of the time. You might hit it only 5% of the time, but 95% of the time, the ball will hit the stumps, right? So you are out. 5% of the time when you connect, you get 6 runs. So the payoff is, so startups are sort of similar, where, you have to swing, and only 5% of the startups will be successful. 95% of them will fail. But the difference is with cricket, where the payoff is infinite. So if a startup hits it out of the park, the payoff is unlimited. Amazon has created $1 trillion company. There was never $1 trillion company in the history of mankind. So the upside is anything that you can build. In cricket, the upside is limited. Kitne bhi dur maro, you only get 6 runs. You don't get 1,000 runs. Okay. So in startups, if you really do well, the asymmetric payoff actually takes care of the low chance of success. So that's what I think. I mean, Amazon, for example, I like Amazon as an example because I think it has achieved something which everyone thought they will fail, but they ended up achieving a lot. Bezos says that 95% of the experiments that he took were all failures. I mean, they all lost. But you don't hear of the failures because when he built AWS, he built it into a $500 billion company. He built Prime, that became a big hit as well. So if your hits are that big and your losses are small, over a period of time, you will do well. So that's how I think about failure. So it's like experiment. So till you experiment, you don't know if you're right or wrong. If you already know what the outcome is going to be, then it's not an experiment. Then, there's no innovation in it because you're not trying something new. So I think it comes down to mindset. I personally think failure is like a part and parcel of being in a startup. Like it's not going to be like a straight ride up. You will fail 95% of the time. So you have to know that is what you are sort of taking off.
Yes. So recently we have seen this trend, and previously, I think in last 2 years, we can say that 2 or 3 years, people have started accepting that, okay, failure is a usual part, not it is that final destination kind of thing. So ecosystem is growing and people are accepting. Otherwise, people choosing for a startup, people will ask, koi abhi naukri nahi mili kya? So that is not the scenario anymore, and I think situation will improve further in time ahead. So
and just to add to that, what is the cost of failure? So let's do this. We know what success will be like. So let's say you fail. What is the cost of failure? Today in India, there is no stigma associated that you tried a startup for 2 years, 3. A lot of my batchmates tried, nothing worked out. They went back to a job. it's easy to go back to a job. Capital, it's not as if like as founders you put in a lot of your capital. If you have a good idea, you have a good team, you find outside investors to put in the capital. So it's not as if like you are losing your money in that sense. So you have risk capital that helps you out to basically experiment. So the cost of failure is the time value that you lost. You lost 2 years, 3 years. But I think that 2-3 years in a startup, you learn what you will learn in a job in 10 years. I mean, I did a job for 14 years. I think I learned more in the 2 years of building your own thing than, investing for 12 years. So I don't see the cost of failure as very high. Back in the day, again, like in our days, in 2006, nobody used to go for a startup. If you went 2-3 years later, nothing really happened. There was a stigma associated with, 3 years ka gap period aa gaya, or whatever. Like people used to say that it was not as well understood by society as it is today. So I think today the cost of failure is also much less. It's about you putting in 3-4 years of your career in this. That's the only sort of cost that I associate. You could have earned money outside somewhere 3 years, but I think in hindsight, it will always pay off. If you have a good idea, you have a good team, doing something by yourself in this time, I think is definitely, it has the best odds it has had in history.
Definitely. And on that, especially if you tried, now companies are also open to take people who have tried for a startup, because they know that while you have invested your time, you have learned lots of things, you have acquired many skills meanwhile. So they are open to, so it is not that if you lost time, then you have gained experience in other parts.
Actually, startup experience, if you really, spend 2-3 years in a startup, from a tech perspective, I think you will be valued better than, let's say, you went through a traditional IT services job for 3 years. Because the amount of technical challenges that startups face are they're next level. There is no technology bifurcation on what you work. You work on everything. You build the whole cloud infrastructure. You build front end, back end. You become a full stack developer. Essentially, the skills that you learn in a startup for 2-3 years are much deeper than 3 years in any other comparable, say, IT services firm. So actually, I know of a lot of companies that actually prefer startup experience because they think that you are much more well-rounded in your tech capabilities than somebody who's just been in the job for 2-3 years.
Okay, so one of the question is, with growing market competition, how do you keep the product updated? Yes.
So that's an interesting question. That depends on, let's say, what industry you are in. But let me tell you one high-level picture. So India GDP is growing 7-8%. Okay, so that GDP is a real GDP. You add inflation to it, India is growing 13 to 14% a year, which means most industries would grow in double digits. So firstly, even if you don't, if you're not taking share away from a competitor, your market itself should grow 10 to 12 to 13% a year. Add to that, a lot of the digital penetration in India is still relatively, it's done very well, but there's still some scope to grow. So you're already in a space, they say that the wave is taking you up, right? There are tailwinds. Yes. So you're already on a plank, which has the tailwinds. So to a certain extent, you have the benefit of being in the right place at the right time. Obviously, you have to have what we also think about is the customer obsession. So when we build anything in the product, you have to make sure that it's something that your customers like. And if they don't like, ditch it very quickly and move on to your next sort of idea. Because in startup world, they call it move fast and break things, which basically means is that you run small experiments. So let me give you an example. So for example, you build an app and the submit button on your product is on the left and not on the right. A lot of people actually literally experiment. Like it might be a 2-day experiment. Let me put the button on the left and try, and let me put a button on the right and try. And in 2 days, they will form a view that what is better, and then they'll quickly change. And so startup is like a lot of mini changes that you keep doing almost literally every week. As a product, you have to continuously keep thinking, not of your, don't think of your competitors, think of your customer, talk to your customers regularly, see what the feedback you're getting, and then keep iterating on the product till your customer is happy. Your customer is happy, your competitor is meaningless. I mean, whatever he builds is not going to be a problem.
Right. So, and another question is, what inspired you towards entrepreneurship?
I would like to give a philosophical answer, but I'll say a very simple thing: midlife crisis. I was 35, and I was looking back at my life. Touch would have had a decent career. I've had a good time for the last 10, 12 years. But I was thinking, what is it that I will say? Let's say if I keep doing this till the age of 60, what will I regret when I meet my grandchildren? I know, sorry, this sounds very filmy, this answer, but this is true. So I thought the only thing I'll be unhappy with is Kia, India was going through so many changes. I was investing. I could see those changes, but I did not have, what's the right word? Did not have the risk ability to basically take a chance and build something of my own. And at 60, I would regret it. And at 60, you can't do anything about it. So rather than regretting at 60, I said, let's take the plunge. And I said, I want to build something.
So, Aman Singh has asked, sir, what your startup is about. Can you please explain in deep?
So yeah, basically, I told you I was in my job, I used to invest in companies. Now, who are the people who would give us the money to invest? These were large institutions. So these are governments, these are endowment funds, pension funds, globally. So think of it as, let's say, when you guys work, your provident fund gets aggregated with EPFO, and EPFO then invests that money. I'm giving a crude example like that. There are funds in the US, pension funds, endowment funds, etc., that invest in companies like ours, and we basically manage their money. So I was already investing money in India and these markets. I thought, why not make a product where you can actually directly manage money for individuals? So for example, today, if an individual in India wants to invest in the equity markets, he invests through, say, mutual funds. Mutual funds has very limited bunch of things that they can do. And they don't have the access to the same kind of products that, let's say, we would build for our clients. So essentially, we wanted to bring those investment solutions to retail customers. And the way to do it is to make the whole investment process driven by technology. So essentially, for example, I'm automating my own job in a way. When we used to invest, we used to sit, analyze a lot of companies, look at their financials, then decide which company to invest in. Do we invest in Reliance, or will we invest in Bharti, or will we invest in whatever company? So that decision-making engine can be made with AI and ML. So essentially, there are certain bunch of inputs that you get. I used to think about how we view different businesses, and then I would come out with a decision to invest or not invest. So we have tried to replace that job with an engine, a tech engine, and then basically automate investing into for all these folks. Yeah.
Okay, that's great. Means this technology, real life application of artificial intelligence and machine learning is there, and main challenge everywhere, even in finances, in medical field, that there are experts available, and we have to infuse their knowledge in these algorithms and then put these algorithms on work. So if you could
Absolutely
do this, and then that means you can scale it up easily.
Exactly. So in this, you give a great example. Like finance and medical is sort of, I mean, medical is more deeper domain, but essentially there is a level of domain knowledge. For example, if I today say that I've created a AI doctor, which people have actually, there are startups which are doing that. How do you create an AI doctor? You still need a doctor to explain the whole process of how he thinks about a disease and how he treats it, right? And then you have to train the engine to do that. So there is an element of domain knowledge that you need. So my background is that domain knowledge. And basically the idea is to translate that into a machine and obviously use a large amount of data to basically train it and build the product on the basis of that.
So, on personal level, what is the lowest amount person can start investing to your
So
startup?
So yeah, this is a little bit of a tricky thing. This is right now the minimum is 2 lakhs, but I'll tell you this. But this is not because I wanted it to be 2 lakhs. This is because there are certain regulations that don't allow you to go below a certain size. So for example, if you have a smaller corpus, say 500 rupees to 1,000 rupees, you can always start with a mutual fund.
Yes.
And then there are products that are made for, let's say, a 50 lakh investment, for a bigger investment than that, etc. So we are in between that. So we are not as low as a mutual fund, but we are not as high as some. These are called portfolio management services. So those there, the minimum is 50 lakhs. So we are sort of in between that.
So that means you are addressing a certain market, and you have previously researched on that. How many market and what is the means capital you can acquire from them, and then you can invest or suggest
That's
them.
correct.
And
So yeah.
and what is the business model? How do you earn money in between? Means you take charges from users, just like subscription base, or on percentage base of investment?
So yeah, we charge on a subscription base. The way to think about it is like today, let's say even if you invest in a mutual fund, a lot of people actually don't know this, but they actually pay a fee as well.
Yes.
The fees embedded into the fund. So let's say you give 100 rupees to invest to your mutual fund. The mutual fund will keep 2 rupees in his pocket. 98 rupees is what he'll invest. Whatever that 98 becomes, that's what you get. So you already lose 2 rupees when you have started investing with them. With us, we have sort of kept a fixed subscription model fee structure where irrespective of the amount you invest. So there are different products. So every product has a fee. And irrespective of the amount you invest in that product, your fee remains the same.
Okay. And sometimes people may be interested in having personalized direct means advisors. So this option is also there.
So this is something that is in the works. We were thinking about it because interestingly, like a doctor, so I'm giving an example where, let's say I make the perfect AI doctor. Like he does a better job than any doctor. But would you trust a machine for, let's say, some sickness you have? You will always say, "Arey yaar, I could see a person. It doesn't feel right. Why should I believe a machine? What if it is wrong, etc." So in finance also, it's very similar because there's money at stake. So people are putting in their hard-earned money. One of the things that we have understood is also that, even though some of these you will have bank RMs, etc., who come and sell you products, they are not very sophisticated finance people, like whatever, like we've run money and all. They are more salespeople, but people still trust them because they are their bank employees.
Yes.
Something goes wrong, they can pick up the phone and call them. So there is an element of what we call phygital, which is part physical, part digital. So we are thinking about a model where we have some sort of a physical offering as well, where if somebody wants to have a discussion with an advisor, he can have a discussion. But for most people who want to, or some people want to do, let's say before they start, they want to have a discussion, but after that they want to be fully digital. They are happy. They don't want to talk again. They want to completely use an app or something. So that is also entirely possible. So we are thinking on those lines. We have not yet finalized anything on that side.
Yes, sometimes I can relate it with it, because when people come and for insurance and other things, especially in March, this session they come, and I realize either they don't know what is the process, or they deliberately don't go
I'll
on.
tell you.
Don't tell
Then
me.
the thing is, in this market, no, the
People,
incentives are a bit misaligned, in that sense that it's a commission based. See, basically, the difference is, let's say if you are my customer and you pay me fees, I am responsible for you. In their case, their customer is not you. They are taking your money, but they get a commission from, say, the insurance company or the mutual fund. So their customer is actually the mutual fund. So they are not thinking of doing what is sort. I mean, if they are completely rational, but they are not trying to do something that's best for you. They are trying to make the most money, because in the commission structure, they will sell you a product which has the highest commission that they earn at the back end. But if they're actually earning money from you, then they care ki, if I make bad returns for them, this I will never get this money again or whatever. So then the focus becomes more sort of you.
okay, definitely. So another question. Your startup, his question is, Aman Singh's question is,
Small
your
case.
startup is
I can
similar to
small.
small case? Yes.
No, so basically, small case is a little bit of a different platform where they do two things. Small case, a gets other managers to basically make some products for them. And secondly, what it also does is transaction execution. So basically, for example, on the back end, I use small case because they allow you access to other demat accounts. So let's say, for example, you are a user of Zerodha and I am a user of HDFC Securities, and there's a third person who's using Axis or Kotak or whatever. They've built a platform where all of these users can basically invest through the same pipe. So I don't have to build a different integration for different brokers. So that as an execution service is definitely very interesting. Small case also has some small portfolios of their own, but that's a very it's a very thematic sort of view. What's the right way to explain this? See, basically, thematic means, let's say today I decide that electric vehicles are doing very well. I don't know what companies make electric vehicles or what companies make electric vehicles parts, etc. So small case will find the 10 companies that are related to electric vehicles and will make a portfolio for you for electric vehicles. Now you have to decide whether electric vehicles have a good future or a bad future or whatever. But they will make and keep it there. So if you have a view that electric vehicles will do well, you can go buy it. Ours is a little bit different, where we say we will keep changing our view. So you don't have to make your own view. You don't have to think about whether electric vehicles will do better or hydrogen cars will be the future or fuel cell will be the future or whatever will happen. We are constantly researching and basically managing your portfolio. And small case is not actually doing it. Small case is creating many portfolios. So you'll find hundreds of small cases on their platform. And you have to figure out for yourself that what is it that I should invest in. Should I invest in electric vehicles or should I invest in something else? So they are more sort of, I mean, there's a term for it which is called thematic portfolios. We do more what is called as active investing, which is what, say, a fund manager would do. It's like a private fund manager, that he'll take your money and, like he was managing it for bigger funds, he will essentially manage it for personalized for your kind of account.
So returning back to means your journey, we can divide. One part is up till schooling, and then another part is your BTech here in IT Lucknow. Then I am Bangalore, 2 years, and then after that, and you were in job. So all this journey, are the rules? Means you are at particular stage, and if you look behind, what these stages have played the role, is how they molded you to be what you are now.
Yeah, so like I think different places were had different sort of influences. Obviously, nothing matches your engineering 4 years. I'll be honest about it. It's the most fun. Everybody, please enjoy your 4 years. Whatever anybody tells you, life is only going to get more tough and more bhagdod once you pass out of engineering. So definitely enjoy your 4 years. I made obviously the most of those 4 years at campus. Then went to IIM. IIM actually was a good stepping stone for me to understand business. Like, for example, I had no idea about what different business. I mean, how do you look at a different business? What is the driving factor of value? So there's some basic training that I got at IIM, which helped me understanding businesses. Obviously, I think the most amount of training that I got was when I was learning investing, when I was working with companies where I invest in other companies. It allowed me to see very different kinds of businesses. So we invested in finance, financial services, banks, NBFCs. We invested in retail companies. We invested in technology companies. We invested in pharma. We invested in hospitals. So then I got to see different kinds of businesses very closely, right? So you know how a hospital is different from a bank, is very different from say pharma. So you can easily then see what is your area of interest. Normally, what I've seen is like sometimes you go into an industry, you only have the view of that industry. So just making an example, let's say you went into steel. You know the ins and outs of steel. Steel is, I mean, you know exactly how the manufacturing process is, what are the steps, etc. But you have no idea what is happening outside the steel industry, right? There's a big trend that is that things are changing, etc. So I felt my investing job allowed me to see the big picture because I was looking at a steel firm and an internet firm and a hospital and this. So it allowed me to basically see different ways that businesses can be run and which business is more exciting for me. It also allowed me to see, so because I was outside of India, I spent most of my life in India. I thought India is how the world is. Once you move out, you realize that how different India is. The scale of opportunity in India is very different. I mean, we all talk about demographics, this, that in India, it's become a very commoditized word. But once you step out and you actually see other countries, you compare it with businesses in different parts of the world, you get a much clearer picture about how this is different and how, you know, this could be a huge opportunity. So I think my investing job actually shaped a lot of my worldview. It shaped most of my understanding about a business. It shaped my understanding about more about the macro trends, etc. And obviously the missing piece is execution. So when you're investing, you basically invest the money and then you let somebody else
Execute.
do the hard work and execute. So that is a skill that I've not honestly learned, and that is something that I'm learning every day. You realize even a small thing like some filing here and there can take up and eat up 1 day, 2 days of your which you had not planned initially. So there are things that you learn. So execution is the missing piece of my skill set, which I'm learning in building my own company.
So I think I would go on last question. That is, recently there is a trend, and maybe for trend for positive, and what is the outcome I don't know. Future will tell. But people have starting their startup from right from their BTech, and they start, and so means how you have taken a long route. You have developed an expertise in field, and then you have started your own startup. So how do you see this new trend? How effective it will be, and what for an individual? What are the pros and cons for doing that?
So sorry, you mean somebody who's starting out later after working for some years, or is that
They are starting early from BTech, because mostly our audience is younger audience
yes, yes.
in their studies.
So interesting tidbit. I also tried to start an e-commerce company 2 years out of I am. When I worked for a year and a half, and I started. I tried to build something in e-commerce also. That obviously didn't go well. So I think the pros and cons are sort of very clear. So I'll tell you the pros of starting early. Your opportunity cost is very low, right? You have not yet got into the habit of getting a stable salary every month. So you don't know how that feels like. So when I started on my career in the first year, obviously you are not really earning that much. So it's easy to say, okay, let's let it go. Let me try this out for 6-12 months and then see how it goes. When you're later in your career, obviously because your salary and your income keeps increasing, the later in the years you do it, the more difficult it is to let go, because they call it the golden handcuffs. So basically, once you start earning a lot of money later in life, it's more difficult for you to leave it. You also get set in your ways, set in your thinking. There's a comfort zone, everything is going in a certain way. let me not disrupt anything. So starting early, low opportunity cost. Starting late, I think high opportunity cost. But there is a there's another pro as well, right? For example, I now see what I tried to do in the first phase would have never worked. And that only came because of 10 years of experience, having seen different businesses. I now know what not to do, at least. Or at least I think I know what not to do, slightly better than what I did earlier. So hopefully that kind of experience helps you once you start later in life. So I think there are pros and cons to both. It's a lot of my batchmates who also started right after I am, or a year or two after I am, have done phenomenally well. So I don't think there's a right or wrong way. It's just for an individual to see. But starting early in life it also allows you. Let's say there's a setback for 2 years, you didn't achieve much. I mean, it doesn't change your life if you're starting at 22 or 24. I mean, it doesn't change the life. But mid in your career, if nothing say works out 3-4 years, it's more difficult to go back to a very high paying job later. So it's sort of a mixed bag.
Yes. So means we have to decide, and recently I think even people try early. It's better to, if you are failing, fail early. That's
Yeah.
and you means have experience while doing these things. So okay, and ecosystem is developed, and recently we have large ecosystem. Just earlier you have explained that thriving ecosystem is there to support you. Previously, even you cannot, I think that time, even the cost of infrastructure and other things you told us, those factors were not there. So those opportunities are available now, so people can take advantage of that.
Correct.
Okay, so with this, I think in benefit of time, we should stop here, and in future, for any specific field, we'll let you. We would like to have you again here with us. So
Sure.
with this part, I would like to thank you for joining us online and sharing your valuable experience and knowledge. And so, and as a formal part, further, which is important also, that is, I would like to thank our team of IIC Institutions Innovation Council, which have made this event possible by looking after every logistics and taking care of that part, especially Adib ji and Sandeep ji. Thank you very much. And I would like to thank President IIC, Professor Kuldeep Sahai sir. He has been our source of inspiration, and now and further our director, Professor Vineet Kansal sir, he he is also one of the strong pillar of support for these type of activities. So his constant guidance is valuable for us. And as always, last but not least, the participants. Your participation makes any event successful. And whether you have joined through our Google Meet or YouTube channel, I think it has added some value if you have invested some time in it. So thank you very much. Thank you, everyone. Thank you. Just one. Yes, Adib ji. One thing is, yes, I would. I'm coming on
Yes,
that. Don't disconnect now. And everyone, I would request just turn on your camera so that we can take an collage picture. So right now in digital mode, there is. Let me take a. This. Just let me paste it. Okay, once again. Okay. Thank you everyone, and thanks Mudit.
Thanks everyone for joining. Bye.
Yes, sir.
Bye.